Hello, traders. It is Monday, the 22nd of October, 2018. It's 8:02 a.m. Chicago time. Thanks for joining me on this fine morning. Hopefully you had a restful weekend. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we're seeing not much really. The NASDAQ is definitely way up. It's up 51 points, trading at 7157, up 0.68%, followed by the Russell. The Russell's up 0.46, 0.47%. The DAX is higher on good news out of Moody's. Moody's has decided not to change Italy's rating. And Italy's, I think by now, should have responded to the EU's concerns about the budget. The European market was responding well this morning to the news. But overall, we're seeing risk on, but only slightly. It's not a huge allocation to risk this morning. The U.S. dollar is up 24.5 cents, and therefore gold is down $2.60. The cable is the laggard today. The cable's down 105 pips, it looks like, 0.8%. Crude oil trading at 69.07. Although I saw a note somewhere that Brent broke 80. That's a big spread between those two products now. Anyway, and the euro's way down. It's really, overall, it's a mixed bag this morning. That's the sentiment we're coming into, I believe. In terms of what's on deck for today, the calendar's clear. Make sure you are not in a crude contract today. Do not go into crude, November crude, the X month letter X coming into today. I'm sure your clearing firm is not allowing you to do it anyway because it's a physically delivered product. But you should be trading and looking at December Z. Nothing on deck really for the calendar. Let's take a look at what we expected for Friday. Friday, the primary scenario is for an open auction that drifts down into the 62 half, 63 area. And I was looking for a test up to 27.99 or so, 27.99, 2800. The secondary is that we continue this one-time framing down and get into a channel and push down lower. Of course, this is not drawn correctly, but the idea for the second scenario is that we break that low at 27.5650 from Thursday, and then we start drifting down into 27.38. Something to note, last week was an inside week to the prior week. So the week of the big drop versus last week. Last week was an inside week. We spent most of the week really chopping around and balancing. Pretty good rotations. Volatility is decent, at least for day trading. And we also closed last week just a point below the prior week. So the close last week was at 27.6775. The prior week was at 27.6875. So what is that telling us? It's telling us the market tried and tried and tried to get above 2800 and hold up there, and it just kept falling back down. So as we look at the week, and we'll look at this on the other chart, as we look at the 2800 here, right here, the market's not able to stay and stabilize above there very well. Here's what actually happened. What actually happened on the 15-minute is this. Let's kill these boxes. So it's the anti-scenario 1, but basically the same. The top is at 2800, the bottom is at 62, right where it was anticipated. But it did it kind of backwards according to the plan. So this morning we had an open drive type behavior, and on Friday the key figure that we needed to be concerned with is this low volume node at 2789.50 or so. It's kind of a weird low volume node, kind of a wide low volume node, but that was the over under. And if you recall, I said that a break of the low volume node is likely to push us into 2797.75, and it did. It pushed through to 2800. So we tested at 2800 and then we fell back through. And we fall back through, what do we expect once we break the LVN on a double distribution? If you don't understand what I'm talking about, just say so. But when we get through the LVN on a double distribution, we expect the highest volume price to be tested. So this is the highest volume price up top. This is the highest volume price at the bottom, which is also the point of control. And so once we break through the LVN to the downside, we want to hang on to that trade down into 27.71, which was the point of control of this day. It ended up pushing to 67.25, pulls back right to the mid, just below the mid in a stock zone. So that's a clear structured setup for me. And then we have a continuation. So we have an impulse, pull back to mid, continuation, hits the next stock zone down, the projected target of 62.50 or so, goes through by a tick, and then spends the rest of the session just going sideways. Just a very orderly auction. And you can see the principles that I've been talking about for 10 years since I came online. Impulse, pullback, mid, continuation, consolidation, and then potentially correction or reversal. That's how things are shaping up currently. Also, you notice Friday was an inside day to Thursday. Lower high, higher low. So we have a bit of a flag kind of thing, or pennant, or whatever you want to call it, triangle. You can even extend that back to here. We are really compressing currently. We do have multiple distributions. We do have an LVN on Friday, a key LVN on Friday, which matches the key LVN on Thursday, which somewhat matches the low on Wednesday, and so on. So we continue to monitor this 27.89. It shifted down to about 88 area, and so overall, that's what we have. When we push this profile forward to see where we are, the point of control remains the same, and here's that profile. Let's make it burning red. Burning red. Boom. All right. It's on fire. Bring it back to where the balancing started. You can start it on the Thursday the 11th or on Friday the 12th. It's the same. And as you can see from this bigger picture microcomposite here, the point of control is quite prominent with a clear key LVN up top in this 27, well, it's shifted quite a bit down, 27.8550 area. So when we trace that through, we see that 87.50 right here. We see a test from above at 83.25. We see a test from below at about 85, and so on and so on. 83.5. Those kind of line up to form this key LVN. It's an important area to watch. Currently, we're trading at 27.7450. We're about 10 points below that low volume node, and we are accepting the fact that here we are with a point of control down at 27.70. I think 27.71, and then we put in a point of control on Friday at where 27.70. More signs of a balance. So what does this mean? Okay, cool. Yeah, you got it. Balance. Cool. Move on. What this means is we have enough fuel potentially to really have an imbalance type day moving out of here. I can't tell you the direction, but what this tells us is be prepared for if we do get a push away from this point of control and we have volume coming in, especially if we watch the delta and we get big delta bars, then what you're looking for in that situation in an imbalanced day is you're looking for the extremes of the prior days. So you would look down into the extreme that forms that microcomposite, and really the extreme of the microcomposite. So 2712 or 2819 and a quarter in that situation. So when that happens, you don't want to fade the move away from the point of control, and you don't want to and you want to hang on. You don't want to sit here, watch the market balance, watch it break, and then just take 3 ticks out of that trade because yay, you have some profit. These are the kinds of setups that you want to hang on to. Here's what we've done in the big picture. This is a daily bar chart, RTH only, of what we've done. So we've moved away from what was balance up here. Okay, we balanced back in this region back here, and then once we broke away from that, once we tested that balance, we broke away from it. This is the kind of move I'm expecting this week. And then what we've done after that, so we had that big move. What we've done after that, it's balanced down here. And what is this? What is significant about this area? What's significant about this area is that it is the most traded prices by volume for this entire region, starting January 26th or something, the peak from back then. So here we are at the point of controls beneath us. We have these high volume nodes that we kind of get stuck in. We have these really prominent low volume nodes as well. And we are in this area kind of resting above the MC point of control for this entire region. This is the most, excuse me, this is the most traded and accepted price for 2018, right here, 27 and a quarter on a roll adjusted basis. Okay, so that's the big picture. Looking at the overnight, what have we done since we've opened? The overnight gap down slightly, and then through the Asian session, we traded sideways mostly, about 15 points, and then we started to break higher late in the evening my time. The Europeans came in right in here, and sideways, Moody's, and then we extend the range up a little bit. We're quite a bit, this looks to me like a P-shaped profile. We balance, we move away. It's almost a double distribution profile at 27.68 with the neckline there, which is the close of the prior day. The inventory, the overnight inventory is pretty much balanced in price and negative in delta. The delta is negative 4,900 or 5,000. The volume is relatively high, relatively elevated as it's been over the last couple of days. It is Monday, and the movement on Monday is the lowest of the week historically, based on range. And so today is one of those days where you need to chill. Just chill out, let the market decide what it wants to do. We're looking for a break from this area. And so until that happens, we're going to have to trade chop. We're going to have to deal with bars that go up and come back down. Here's an example of what that looks like. This sort of stuff right here. This sort of stuff, where we have a break higher, breaks lower, breaks higher again, consolidates, continues to break higher, we have this kind of higher than usual rotations that chop over themselves. And that's what's going to be common, in my opinion, for today. Again, we're looking for a break from this area. That's the biggest piece that we have here of the puzzle. The biggest foundation we have is that we've been balancing on top of balance on top of balance with a high kurtosis, or high, non-technical word, high belly to this consolidation area that we are right on top of right now at 2772, and we're likely to break one way or the other. That's a lot of people that have taken positions in or around this area who are likely to be wrong. One side's likely to be wrong once it starts moving, potentially, depending on the time frame. This morning we're opening inside of the value area, of course, inside of the range. And then we are right on top of the point of control. The points of control, as I said, are on top of each other from day to day. Thursday and Friday, the points of control are right on top of each other. I'm expecting an awful lot of chop in here. Okay? And so with that being said, I'm looking forward to test back up into that 85.50, potentially push to 89. I'm looking for an impulse down. I'm looking for this to struggle to keep prices higher, and I'm looking for it to fall through to the downside. Given what we've done so far, if you follow the auction bar, and the best way to do this is to follow the auction bar by bar. In fact, if you can follow it in high-speed replay, like 20 or 30 times speed replay, and watch the bars form and how they move lower versus higher, you'll start to see what I'm talking about. So the main idea here is that we're looking for this impulse down, and we're looking for the continuation lower. And the expectation is it's likely to push through to the composite low volume node down here at 2750. This is a big low volume node area that we're likely to retest. Next, the secondary scenario, failing that, open auction drifts down, comes into Friday's low. I expect it to slip lower through both of these lows. Okay, potential stops there, little flush, and then to start to balance back up, and then ultimately we hold for another day, which sets us up for a nice Tuesday trade if we end up back in balance today. There's a strong potential that Tuesday will be the mover. Tuesday generally has the expanded range and volume for the week. So that's that. Other than that, it's all about managing your expectations for the week and managing your emotions. There's a lot on the calendar this week across Europe. Just quite a bit. We have Beige Book Wednesday. We have a lot of, every day we have central bank speakers. We have the ECB rate decision on Thursday, German GFK. We have just a lot on deck for this week. So it's kind of heavy throughout the week, mostly in Europe. We do get GDP on Friday. And again, lots of speakers, and of course, pay attention to the news. Good luck today, and I'll catch you throughout the week tomorrow. Take care.